top of the news, of course, the coronavirus, and we've seen how oil slumped on the back of that because there's expectations that demand will be dented. Your initial reaction?
Yeah, it's it's obviously an emerging situation, and news continues to come out. I actually lived in Asia during SARS, so I recall the reaction that people feel when you don't know. And something like this can be very frightening. And so I think there is a tendency for people to stop traveling and to kind of hunker down. This is right around the Lunar New Year as well. So I think we'll have to watch and see. But clearly markets in, I think, oil and other industries seem to be anticipating a bit of a reduction in travel and other types of activities.
Watch and see, but it's already spread. In fact, as we speak, it's been confirmed that we've seen the first case in Singapore, and we've had cases in Macau as well as Hong Kong. If there is a reaction in terms of a drop in demand, could you perhaps give an estimate? I mean, what kind of demand drop are we looking at?
Yeah, I think it's really early to speculate on something like that. Primarily, I think would affect air travel, and certainly in other episodes of similar viruses, we've seen the airports, particularly throughout Asia, now have pretty good plans to be prepared to monitor people, and I think the airlines as well have good contingency plans. So I actually think it's early to draw any strong conclusions about this until we have some more information.
Chevron entered 2020 with pretty good momentum. How do you build that momentum in 2021? 2020, 2021?
Sure. You stay focused on the basics. We had a very strong year last year. We led all of our peers in total shareholder return. We actually were the only one of our large peers that was able to raise our dividend, pay our full capital program, reduce debt, and buy back shares, all out of cash flow. So we have a very strong and advantaged asset position. We've been very disciplined with capital and costs. We're looking to improve returns and just stay focused on the fundamentals.
Yet some analysts say that you're possibly complacent because of cost overruns. What's your reaction to that?
Well, I think they're referring to a very large project that we have underway in Kazakhstan, which just recently underwent a schedule and cost review, and both the cost and the schedule showed some growth. In terms of our core business, we're actually looking to take more cost out and become more efficient. We've done a lot since commodity prices came off in the middle of last decade, but we can't afford to be complacent. And in fact, I would argue that that's the last thing that we are. We're very focused on continuing to become more efficient. In a commodity business, costs always matter and capital discipline always matters.
I want to take a look at the oil market. It's in a way strange, despite all the geopolitics. When we take a look at the impact on oil prices themselves, they don't go beyond a couple of hours. Has anything changed in the oil market environment? What's changed to lead to that kind of reaction?
I think there's been a real fundamental shift over the last decade. There was a time when geopolitical events in the Middle East or something like you just referred to with this virus could have outsized reactions in the marketplace. And now we see that the volatility is within a much smaller range. The big reason, two reasons. One, the market is pretty well supplied right now. So supply is in excess of demand. OPEC has made some cuts. But the second one is the U.S. is now the world's largest producer. The U.S. is an exporter of oil for the first time in decades. And the U.S. supply comes from an asset class that is pretty flexible. And so I think the market sees less likelihood of extreme imbalances. And so you tend to see the prices move in a narrower range.
There are some expectations that U.S. shale production could drop significantly. Do you share that view?
Well, I think the projections are that the rate of growth may come down. Shale production in the U.S. now, we're producing over 13 million barrels a day in the U.S. And growth last year was more than 1 million barrels per day of incremental production. And every forecast I've seen suggests that will continue this year, perhaps not at the same rate as last year, so it could slow a bit the rate of growth, but the actual production will grow, not fall in 2020.
Of course, the focus here in Davos is sustainability and climate change, and there is a sense out there that perhaps large U.S. oil companies are lagging behind their rivals in Europe. I mean, is it just a matter of time before U.S. oil companies play catch up, or is this just a different philosophy, different thinking among U.S. oil companies?
Well, I think the companies operate in a slightly different social and market environment, and so I do think there are some differences there. But I would tell you, I don't think that the U.S. companies are complacent. I don't think that they're inactive at all. Not just the company that I represent, but all the companies that I interact with in the U.S. are very committed. They believe climate change is a real issue. They're committed to taking actions, and I see actions being taken to reduce emissions, to increase
What actions are you
renewables.
taking?
So we've got a number of things. We're looking to reduce the carbon intensity of all of our operations. We've actually adopted 4 greenhouse gas reduction metrics that affect not only my compensation, but almost every employee in the company. It affects their compensation. So we're reducing our own emissions. We're integrating renewables into our business in a bigger way. So it's not only using wind and solar to power our operations, but we sell biofuels. We're getting ready to feed bio feedstocks into our own refineries. We're working with dairy farmers in California to capture the waste products from dairy farms and create renewable natural gas. So we're working hard to integrate renewables. And then I think the thing that offers the most promise is investing in technology. And so we've set a $100 million venture fund. We're part of a $1 billion venture fund with others in our industry to invest in things like carbon capture, direct air carbon capture from combustion stacks, new battery technology, autonomous vehicle technology. And so we're investing, trying to find the breakthrough technologies that really can shift the energy game and help us reduce emissions into the future. So I think the U.S. companies are very engaged.
Just one final question before we let you go. In terms of M&A, I mean, Endako was a mega deal. Are you looking at anything else? What would make sense? Valuations could be looking pretty attractive right now.
Yeah, I can't really comment on what we might. We're always looking, but if we have anything that we're ready to announce, we'll certainly let you know. We've got plenty of capacity to do something, but we don't need to. Our core business is very, very strong, so we'd only do something if it made good sense for our shareholders.